Welcome to Must Know ADU Strategies for 2024, presented by ADU Resource Center. I'm your host, Danny Johnson. The goal of this broadcast is to create an informational hub for homeowners planning an ADU project of their own. This will be an ongoing webinar beginning in January of 2023 with special guest speakers from our industry so you can get a variety of tips and information to strategize your very own ADU project. Some of the topics we're going to cover are updates and tips for financing solutions, information on the CalHEFA ADU grant, and new legislation laws for ADUs and more. ADU Resource Center began building custom and tract homes in California and Florida back in 2010. In 2020, new legislation changed ADU restrictions for most city ordinances in California. We saw this as a new opportunity and wanted to pitch in and help affordable housing solutions. That's when we changed our DBA to ADU Resource Center and never turned back. Our company is now ADU specific, meaning that's all we build. Since our transition, we now have over 300 plus ADU projects in various stages of permitting, planning, and construction. We are well on our way to becoming the fastest growing and largest ADU builder in California. Southern Californians have chosen ADU Resource Center as their first choice for project concept designs, architectural design, structural engineering, Title 24 engineering, low impact development planning, plan submission, revisions and retrieval, licensed general contracting, landscape and hardscape design, all under one company so we can effectively manage the entire project from beginning to end and to streamline better communication, coordinate smoother handoffs between divisions and teams, and reduce mistakes with more eyes on your project. And now, let's begin our program.
Well, good evening, everybody. I love that intro. Welcome to our webinar. It is the month of May. It's May 28th. And in a continued effort to keep Southern California updated in the ADU process, ADU Resource Center holds this monthly educational webinar in hopes to educate everybody and help them understand what's going on in the ADU space and why mostly ADUs have become so popular. We have a great show tonight. Before I introduce the panel of guests, I think I want to take this time and say, here's some of the talking points we're going to be discussing tonight. One of the things that I think people are wanting to know a lot about lately is the financing dilemma. A lot of people are posting things that, how do I get my ADU financed? When is the best time to start my ADU project design? Is waiting for lower interest rates a smart decision? Will waiting for lowered interest rates trigger higher construction costs down the road? And which of the two is the worst of the two evils? Some people have said, hey, I have a really low interest rate and I didn't really want to refinance my mortgage. So what's the best loan product to use the equity to fund my ADU project? Good question. And we've had even more people said, hey, I've already tried to get finance and I was turned down due to excessive debt obligations, debt versus income ratio, or lack of income. And are non-equity loan options cost effective for building ADUs like hard money loans? So things like that. I think we're going to get into this. And Karol, you're going to help me when we start talking about, the conditions of why ADUs are so popular. Just quick facts before I introduce our guest panel. 80,000 ADUs were built in California since 2020. 75% of those were built in the last 2 years alone. So why have ADUs become in such demand? And the short answer is because ADUs solve a lot of really bad problems. So we're going to be talking about some of those problems. And they really are dilemmas of challenges of not problems, but here's the top 4 basic problems that we're all going to experience sooner or later. Assisted living solutions. What are we going to do with my mom and dad? We all know the cost of assisted living. Home care is very, very expensive. What about supplemental income challenges to help us improve our current or future lifestyle as we approach retirement? We're all kind of sort of nervous about that. Our kids are going to eventually have to figure out how the first-time buyer solutions are going to work for them, and can they actually afford or qualify for a loan on a brand new home? Some people are finding it that no, they cannot. So ADUs are solving that problem. And then finally, I see that we have a lot of investors on tonight, so that's good. Investment property optimization for landlords and multifamily property owners and non-owner occupied property owners. So for investors that like to flip homes and so forth, we all know that the deal is in the buy. If we can buy it right, we can flip it and make a good profit. But lately, with the home market being what it is, it's been tough to buy things the way you used to. So what we're learning is that home optimization or property optimization to raise the cap rate of the existing property by adding an ADU. I mean, just an unused portion of the property, or possibly even couple of carports or garages that are not being used. They can actually change your cap rate by double or triple. So we're going to be talking about all those obstacles and solutions tonight. With me to help me tonight, I'd like to introduce my guest panel. So I'd like to introduce from Banrock Financial, Henrik Bandari, who is the company CEO and broker, and he has over 25 years experience of finance consulting. In addition, he's a maverick in residential and commercial and private money arena. The company philosophy and motto is to help each client beyond lending. With him is Karol Kochova, Vice President of Sales and Business Development at Banrock Financial, and she brings with her 35 years of experience and enjoys doing her business with a personal touch. Her experience includes the field of real estate, financing, coaching, mediation, and she also has some law enforcement background. With her multicultural background, it helps her to stay connected with a more diverse clientele as well as stay versed in a variety of communication situations. Her focus is on lifelong relationships based on trust, and she believes that good deeds and positive actions come full circle. And I couldn't agree more. So welcome to the show and the panel, everyone. Let's see. All right. I need a guinea pig. I think we're going to start with you, Henrik. So you're the big cheese, you're the CEO. Where would you like to begin? I think you brought a presentation that we can just sort of follow along and learn something.
Hello, everyone. Thank you for joining us tonight, and hope you get plenty of information that we're going to provide. Karol and I are going to provide to you. Go ahead and go to the next slide. Our goal tonight is going to be making sure you guys clearly understand what types of financings out there for building ADUs, and whether it's the right choice you're going to make or not. And then obviously we'll end it up with a Q&A section. Next slide. By building an ADU, you'll increase your property value because you're adding square footage on a piece of property. Banks, then institutions will value that because you have actual square footage that you're added to your existing square footage. ADU can generate passive income for your future retirements. One other reason ADU is good for is allowing senior citizens, your parents, in-laws to join you, consolidating families with the high cost of living out nowadays that's going on, and allowing your kids to start their beginner home, be close by, so helps them get on their feet financially. The other purposes of building an ADU is maximizing the use of your lot. You're paying property taxes for that piece of land. Increasing units on your property will definitely help you maximize your return on your investment and future investment growth. Karol, if you'd like to add a few words in here, feel free.
Thank you. I think you covered some of the highlights. I'll wait for you to finish with this presentation, and then I'll chime in and elaborate on a little bit more.
Sure. Next slide. Um, Understanding the equity of your property is very important, not only financially as far as how it impacts your taxes, personal taxes, how it improves your equity of your property in the future, and what type of investment rate on return on your investment will give you. There's three main factors when it comes to your equity of your property. There are different types of programs out there, but the main two types of ways you can take out equity on your property is by a home equity line of credit and or a home equity loan, and I'll go into that in depth. And another way also is being able to refinance and cashing out the equity. It all depends on what makes sense financially. Basically, the word equity means that you're using the equity that your property has built over time that you had, and where the banks take that as an additional collateral, and they give you a loan based on that additional collateral that your property has, and you can use that to build your ADU. Next slide. A home equity line of credit is just like a credit card. It's revolving line of credit. It's over 30 years, and then the first 5 to 10 years, it's revolving. You could borrow against it, pay it back, borrow it again. We call that the draw period. You have either 5-year or 10-year to draw on this line of credit. You can borrow whenever you need the funds. So, in the beginning, when you get the line of credit to start your project, you're in development mode. You don't need the funds. You don't pay interest on that money that you borrow. And as you pay interest as you start drawing on that line, you will have a limit based on your qualification. You will, just like a credit card has a limit, and you will not be able to exceed that limit. You'll know when you apply for the loan, and you'll see how much you got approved for. So it has a lot of flexibility, and it saves you interest in a short period of time. The interest rate is based on the prime rate. Currently, it's at 7.5%. And it varies based on what the government decides to do as far as lowering or increasing. Now it's a great time to take the equity lines out, is because we're going to probably see the prime rate going downwards, not upwards, about how it's been last 3-4 years. So there's a very high chance that your interest rate will continue going down, and your payments will go down over the next 5 to 10 years as the prime rate goes down. During the draw period, as you're using this line for your project, it is an interest-only payment. So the principal, most cases, it's up to you how you want to aggressively pay down your balance. One of the benefits of a home equity line, just like a credit card, is as let's say you borrow $25,000, and the next month you want to pay down $5,000. The following month your payment will be on $20,000 versus interest only versus $25,000. So you as you have additional capital, you can pay it down aggressively and pay off the line very quickly, having that comfort that you could reuse that as you wish for your project. After the initial draw period ends, the loan turns into what's called a repayment plan period, meaning that, let's say you have a 30-year home equity loan. The term is 30 years. The first 10 years, you've exhausted the draw period. Let's assume you have a $250,000 line. After 10 years, you used up, you've paid down 50,000 of it. You have a $200,000 balance, and the $200,000 balance will then turn into a 20-year repayment plan, where it'll be amortized over the remaining 20 years, and the payments at that time will have principal portion with it, and you will no longer be able to draw against the line. So basically, that's kind of a home equity line of credit. On the next slide, I'll talk about what a home equity loan is. Go ahead. The home equity loan is very similar to your first mortgage. You get the money lump sum up front, like you got your first mortgage. It is a fixed rate. They tend to be a little lower rate than the equity lines. You pay payments from month one on the entire amount. You get the lump sum loan on the entire amount, and it's a 30-year fix. You can have a 15-year fix, a 20-year fix, or a 30-year fix. And payments have principal with it, and you're paying principal and interest from day one. This is normally better for clients that have already gone through the planning period. They need the capital all at once. It's easier to qualify for a home equity loan versus a line of credit. It's for a longer period of investment versus a shorter period. Equity lines are for shorter period of investments. Next slide. Here's a side-by-side comparison what an equity line is versus HELOAN. Again, home equity line is a revolving line of credit. You draw as you wish. A home equity loan, you get paid lump sum up front. Home equity loans are usually adjustable rates based on the prime rate. Home equity loan is a fixed rate. Home equity line of credit have interest-only option. Home equity loans are fixed in monthly payments. Home equity lines of credits tend to be a little higher on interest rate versus home equity loan. And they could go all the way up to 18% based on the prime rate if it does go up. There is a ceiling and there is a floor also. The floor is 2.5%. And the ceiling is 18% on the home equity line of credit. On the HELOANs, it's a fixed rate over the 30-year period. The home equity line of credit saves you cost and interest over the time, because you could pay that down aggressively, which is called a velocity mortgage, and I can go into the details later on. The home equity loan has more expense because you're getting a bigger lump sum loan up front. Next slide. To determine which is right for you for your project, whether you're considering a home equity line of credit or home equity loan, you have to determine what time frame you're looking at with your project. If you're in the beginning stages and there's a lot of planning you're going to do and you need more flexibility, and you don't want to utilize most of the funds that you have allocated, you got approved for a line of credit. You have some of your own capital that you want to invest. The home equity line of credit is typically the more right product for you as an investor or owner builder. Equity lines gives you, again, more flexibility, and it saves you interest because you're drawing as you proceed with your project. On the home equity loan, if you have it works more for longer term investments, meaning that if you have already your budget, your plans done, you have all your subs, builder, contractor in line, and you just want to get the money up front and just move right into your project and finish and have the funds all available and have just start building your project. And you're going to keep this project or ADU in the for long term. You're not building to resell. Then the home equity loan would be the right fit for you, because you have pretty much all the parts aligned, and you're going to use the capital, and you know what the payments are going to be, so you can do your monthly financial analysis, see if it's going to work, and it's more stable payment versus the line of credit. Next slide. One of the few benefits of having an ADU, I actually like to let Karol take this slide over. Karol, go ahead and.
Got it. Well, a warm hello to everybody that's with us. Thank you for spending the next hour or so with us. Our intention is that you walk away from this webinar understanding the importance of ADUs and how you can finance them. So I'd like to take a minute to kind of tap on why we are where we are, and you might have the question of how is it that these ADUs are popping up everywhere? So the state law was always there. So in the 80s, actually in 1982, there was a law. California allowed people to build an ADU on their property. However, the local ordinances, which is the cities, always had a more restrictive guideline. So pretty much they did not want them in their backyards. So that was one of the reasons that people were not able to build, because the city made it so difficult in being able to get permits and permission to build with so many restrictions and guidelines and setbacks and parking and square footage and all that, that people were really not able to build them. Back in 2016, what happens, I'm going to put a little bit of twist of the real estate side along with the financing, so we all have a better understanding of this amazing possibility that homeowners today have. And if their property allows them to build this would be it's almost like hitting a gold mine in your home, that now you're able to build additional units that will meet many, many different needs. So back in 2016, what happened is with CAR, with the real estate organization, we started lobbying and standing for home ownership and property ownership rights, which means if you own a property, you have the right to build and do as you wish with it. So these laws passed, and they started kind of pushing down on the cities to allow for homeowners to be able to build ADUs as they wished. Of course, there's still some guidelines that one must follow. So what purpose does this serve, and why did California choose to make it much easier to build these ADUs? Number one, California is in a housing crisis. We are very limited on housing. Number two, the gentrification that we see happening all around us, with lifestyles changing, with neighborhoods changing, with smaller businesses, smaller homes going away, and then all of a sudden you see all these high rises and all that. The reason this is all happening is because we're in such a shortage of homes. So the state decided if people have the lot, if they have the space and they have the ability, they should be able to build an ADU. Now, it meets many, many needs in today's world with affordability factors for a lot of people that have adult children that are not able to start on their first home. This is a great opportunity for them to build with their parents and help with the payments of the second or however they finance it, while they establish themselves and prepare themselves to be able to buy their first home. It helps families that have aging parents, and you don't have either they don't have the funds, or some people don't trust the facilities to put your loved ones in. So this is a great alternative, that you have your loved ones close to you and they're able to have the help that they want, with assisted living situations. Some people want it as a rental, supplemental income for them. Some people are thinking about their retirement and what's going to happen when they reach of retirement age with when you look at inflation going up and the cost of everything, and their retirement might not be sufficient enough for them to continue their lifestyle. So a lot of people, a lot of the clients that we talk to, one of their plan is eventually to move into the ADU and rent the front house, which will generate more income, or vice versa. So the possibility that this amazing project brings to families is a value that you can't really put a dollar amount on, because it's meeting a lot of needs that each individual family has separately. So with that, as Henrik was saying, we do, we do finance whatever is the best situation for people. And as Henrik explained, the difference of HELOC and HELOAN, and it's very simple. The HELOC, think of it as a credit card. It's when you use it, you pay it. If you don't use it, you have no payment on it. And the people that want to do the project in phases benefit from the HELOC, because you can take the money out when you need it and make payments on it. And if you don't need it, you're not drawing. Whereas the HELOAN, it's like a loan. You apply for $200,000. They're going to give that to you up front, and that might be for people that have a more speedy process, or they have a time limit that they want this ADU built in the fastest possible way. That ADU Resource Center can build it. So it's really a very unique situation for everyone that's on this. And we understand that we have more investors on tonight with us, and we also have homeowners. So with that, we like to, I think, once we're done with the options, open it up to Q&A, because I think we all learn more when people are asking real life questions, and hopefully we can answer your questions for you.
Karol, if I may elaborate on this slide a bit more for our audience. So potential to rent or generate income with an ADU is very important for investors or current homeowners that want to have a passive income for their retirement. Building an extra unit on your property will help you cover the future housing expenses as you go into retirement, and you're earning lesser income from your Social Security. You'll help. The ADU will definitely help subsidize some of that decrease in income. As investors, it actually adds a value added to your project, and it increases your cash flow by building an ADU without paying additional property taxes or buying another property to have another rental portfolio where you're increasing the number of units on a single property. That's bullet number one. It increases your property value. The banks, the way they value properties with a is that you don't, let's say if you build a 1,200 square foot, the homes go for, let's say, $300 a square foot in the area. And there is a misconception with a lot of investors is that when they build a 1,200 square foot ADU, they assume that, now I went from a 2,000 house main house to a 3,200 house with a 3,200 square feet dwelling entirely on the property. I have a 1,200 square foot house now, and now I've just almost more than doubled my valuation. No, appraisals don't look at that way. It is an accessory dwelling unit. They value the ADUs a bit differently based on because it is an accessory dwelling. It's not an actual single family. I want to educate our investors on that, but still a great way to add value, increase cash flow. One of the other benefits is by having an accounting degree and a finance degree, it help if you're at an age where you want to bring your parents to live with you. You build an ADU, you have your parents live at the same address, you can now become their in-home supportive services provider. You can generate income from the government. And then not only that, and they live with you, and you can provide a better care, assisted living care. Cost of care is less, and generating income and providing more of a safe haven for your parents to live with you on the same lot where you have close eye on them. That's another benefit. And you get one of the benefits of being your parents' in-home care IHHS provider is that income is tax-free by the government. Since they're living with you, you don't pay taxes on that income. And that in lines with providing housing for adults and providing assisted living for your adults. So we'll continue to the next slide. This is a scenario I came up with to just give you guys an idea of what it looks like. Assuming you have you get approved for 150,000 equity line or home equity loan to build a 500 to 1,200 square feet ADU. That's kind of the range. And assuming you build a 500 square foot in LA, your anticipated income is going to be about $1,800 just for 500 square feet. And the payment on a $150,000 equity loan or line of credit at 8.5%, you're looking at about $1,200 a month, where you have a net positive income cash flow of about just under $600. And that's only just on probably a 1-bedroom, 1-bath, 500 square feet ADU. But obviously, for a $150,000 loan, you can probably 3-bedroom, 2-bath, where your rental income would be probably close to $2,800 to $3,200 range, and now your cash flows, close to about $1,800 a month, which is great. And not only that, you're adding value to your property. This is for our investors, of course, or homeowners. Next slide, please. The steps to in getting your loans approved, or not approved, but preparing for your loan. One of the first steps we're going to do is review what the current equity your home has by doing a quick AVM, automated valuation that we use, and we'll determine how much equity you have based on the for your first, if the property's paid off or not, if there's a first mortgage on title on property or not, and then we'll determine what your equity is. Typically, for primary homeowners that want to just add another unit, we can go up to 90% of your value. For investors, we can go up to about 80% of your value. Then you'll obviously get with your contractor, designer, and design what you want to build, what your budget is going to be, get estimates for your project, and determine what the loan amount you're going to need to build this ADU for your project. And then we'll make an appointment to go in depth analysis of your financial documents, your loan situation, and the equity that you're looking to borrow, and what banks are going to provide what type of loans for you based on your documentation presented to us. In this section, we'll analyze your documents. We have many products. We work over 100 different banks. We are a direct lender. I underwrite and approve the files myself in-house with my support team. And we have full documentation loans. We have stated income loans. We have profit loss statement loans. We have no doc loans. We have investor loans. So we have all bank statement loans. We have all type of creative financing with less documentation for any type of borrower that we may have. Basically, we have a box that you'll fit in. And then once you get your pre-approval, then you go and start doing your permits and design work and start your project. Next slide, please. I want to personally, we'll start our Q&A session right now, and I want to personally thank you all for attending tonight, and hope this was educational. And Karol and I are here to answer any questions, specific questions you guys may have.
Thank you, Henrik. Thank you very much. Karol, thank you for your input. I kind of want to relax things just a little bit. That's a lot of data, and there's going to, and Karol and Henrik, we talked about this off camera yesterday, or was it the day before, that, having a webinar like this with homeowners and investors, it's kind of like having a classroom with younger students and college students mixed in, because we don't want to talk over the heads of people that are learning, and we don't want to slow it down so much that we bore people that are, kind of more experienced and fast track. So we have to try to find a blend and an average. So maybe the Q&A is probably the best way to do that. So I'm going to start going down the list of some of the questions that are asked, and Karol, feel free to chime in. Henrik, you do the same. This is an ADU related question. Did the Department of Housing offer a $40,000 something this year for license and permit? If not, what about in 2026? Do they approve it on the budget? Okay, so I think you're referring to the ADU grant. There was a $40,000 ADU grant. That was a couple years back. In 2022, we went through $100 million worth of grants. And at $40,000, that's 2,500 grants. We went through that rapidly, very quickly. The next year, they reloaded, but the amount was only for 35 mil. So I think we went through that in 7 days, and then it was gone. Now, because of the way the economy was, they did not renew it. And I think we all have TVs, we watch the news. We have a little bit of a budget problem issue in both Los Angeles and California in general. So we have a pretty good sized deficit. Is this going to be renewed? It doesn't seem so. It doesn't seem likely. I don't want to say never, but I think that money came and went, and maybe this had a contribution of how we built so many ADUs so fast. But yes, there was a grant for a while. 40,000 was the number, and it is long gone. And I don't know that it's coming back until we figure out how to balance our budget. I think it's going to be a tough one. What do you think, Karol?
Yeah, I think what you're talking about is through CalHFA, and the problem with these things, they come and go so fast, and their guidelines are so strict that not many people fall into the guidelines of qualification. But yeah, those programs come and fly off the shelf rather quickly.
Yeah.
Until the next one comes along. Yeah.
Right. Yolanda wants to know how do ADUs affect the property taxes. This is a really good question. So for those that are thinking about building an ADU, number one, the main house is grandfathered in. That's not going to change. So if we know what the ingredients of an ADU is, it's going to be a kitchen, bedroom, bathroom, room, and an address. So that address is going to have its own assessor's parcel number. So believe it or not, you're going to have your own property tax adjustment on only the improvements, so the ADU itself. And it'll come out in time, as it appraises, because the neat thing about ADU is you plant $1 in the ground. If you take money out of your property and you reinvest it into an ADU, for every $1 you invest, you grow back $3 eventually. So I think there's no question it's going to appraise. Initially, you can use 1.25% of the construction cost as a working person's formula to try to figure out what what your tax base on the ADU would be. And that seems to be a universal number because everybody has a number, but that one keeps coming up most. I don't know that all the appraisers have this thing figured out because ADUs are brand new. Remember, they've only really been legalized since 2020. So we are in a little bit of uncharted territory, but 1.25% seems to be the number I'm hearing. What about you, Karol?
Yeah, I think so. It's very important for everybody to know that the main house does not get reassessed. It doesn't have anything to do with the main house. Like you say, it's a separate dwelling, and I think they go based off let's say it $200,000 was the price for the ADU, but it really 180 with the construction and material. It's usually about 1 to 1.1%. So let's just say 200,000. So 1% would be $2,000 annually, which is really minimal when you think about what,
Yeah.
yeah.
And I think what I think we're finding a lot of people either start off with the ADU for a family function, but it gets repurposed down the road, doesn't it? It almost always turns into a mailbox money situation. So if eventually somebody is paying rent, I can assure you the tenant is paying the property taxes, not the homeowner. At some point, it's all kind of wound up and factored in there.
Yeah, I'd like to add something else on the real estate realm. Some people ask why some homes are staying on the market and the other ones are flying off the shelf and selling so fast. And it's because investors are looking for properties that they can build an ADU on. So very high in demand, these types of properties. And one of the future things, we actually didn't even talk about that some professions use that ADU as their office.
Right.
Accountants, therapists, any kind of service business like that where you need an office. So it another benefit that this ADU meets in the list of all the positive things.
Hey, while I'm
I like to add, Danny, regarding the property taxes, and once you build an ADU with a different address on the tax returns, the investor or individual can report that additional address as a rental property on their Schedule E. And that Schedule E, they can deduct the additional interest on the second mortgage that they take out, the additional taxes, that property taxes that were increased, and the insurance. And not only that, they can depreciate over 27 years the improvements that they did on that ADU. So now this ADU becomes a tax advantage, tax planning for their income taxes that pay. And in most cases, it'll lower their tax liability to IRS.
Henrik, there's another topic that you and I talked about the other day, and I wanted to remind myself to bring it up because it was very, very important. We started talking about one of the conditions that's become super, super popular. Assisted living is a very, very big, powerful dilemma right now. So we've all, at some point there is going to be a changing of the guard. Our parents took care of us when we were young, and now it's our turn to take care of them. So we have choices. And the fork in the road it was a tough one, but it's easier now. And I think what's happening is when a lot of people are trying to figure out, if maybe what happens to my mother if she falls? She could be laying on the floor. And what if she's laying there 4 days? That's terrible to think of. Or sometimes some of these seniors have just a dose of Alzheimer's. Maybe it's not a good idea to have them cooking on an open flame. They can walk away from the stove and burn the place down. So the idea of assisted living is good. But then we start shopping around. We discover this is almost $10,000 a month. So now we have to have a family meeting with all our brothers and sisters, and then we're all going to chip in and do this thing. So here's a really interesting thing. If we go look at Leisure World down at Seal Beach, it's almost $10,000 a month, right? So that's $120,000 a year. Well, what if your mom and dad lived 10 years? You just spent $1 million and you have nothing to show for it. What if we did something different? Well, instead of taking the road to the left, what if we went to the right and we built an ADU in the backyard with some unused property and we built a little apartment for mom or dad or something like that? Number one, if anything happens, we can go out. Hey, I haven't heard from mom. And somebody go out there and check on her, right? Or tell mom it's time for dinner. She gets to spend quality time with the grandkids until which time she is no longer in this world. That ADU now becomes repurposed and used for something else. I wanted to talk, Henrik, about what about the families that are actually considering doing that? Because we have more three generations living on the same property now for the first time in 85 years because of ADUs. And I really feel proud about that, that we're a part of that. But there is a condition where they can actually get paid for assisted living care. Can you kind of go through that so people know that option's available, please?
Absolutely. Karol, you want to take this or you want to take this?
I'll take the first part, you take the second part. So
Okay,
then,
go ahead.
so scenario, right? Let's say, so the more people, everybody that's on this webinar, right, they might decide to do this or not, but when they have the information, whenever they're in a conversation in any setting and somebody mentions something like this, at least they can offer this service to them. Scenario, right? You have a grandma that is 85 years old that has a house that's paid off, right? And the old houses, big lot, small, 2 bedroom, 1 bath. Grandkids or the children, or usually it's the grandkids, they don't have, and this is because it's happened, they don't have the affordability factor to go buy a home, right? But they're thinking about grandma and what's going to happen to her. So they present the offer to grandma, we're going to build an ADU in your property, we'll pay for it, and eventually we're gonna be here to take care of you. Or now they have the possibility of moving grandma there, bringing the help in for her, and that's what Henrik will talk about with the in-home supportive services. When you have someone that takes care of you, and they're getting paid for that, so that also becomes beneficial in that tax bracket. And then Henrik will tap on that when it comes to the IHSS payments.
Yeah, absolutely. So under the IRS rules, when you provide in-home services for your parents and you're providing care, uh, when they live with you, that income, they get paid currently $18.50 an hour in LA County. And the hours, weekly hours, are determined based on their need, their age, how healthy they are, how much of a need they have. And I've seen IHHS pay stubs and W-2s
We lose his volume.
as $30,000-$40,000 a year, and high hours of need per week for their someone to take care of them. Now, these hours are not determined like a full-time hours where you have to clock in at 8 o'clock and clock out at 5 p.m. It's based on, as long as you meet those hours on a weekly basis, you report to IHHS and you get paid. The benefit of that is that if the parents live with you, that income is taxed free on your taxes. So now, not only you utilize that income on your taxes and you provide care for your parents, while they also earn their Social Security income, their retirement income on top of that's their income. This is income that you earn by them living with you in the ADU that you build. That's completely separate and it's tax-free income. And then the other benefit is that these ADUs, they're passing heavy laws now. Karol can elaborate on more on that. Is on Section 8 housing. So now your parents can also get support from Section 8 housing to cover some of the mortgage that you're paying on this ADU, additional mortgage that you're borrowing. So that's in the horizon, and they're going to start allowing Section 8 housing approvals for these ADUs that are being built. And it's great for investors as well. Another thing I'll have Danny, you elaborate, is I think they could now build junior ADUs. And going back to property taxes, so from what I understand, on a single property, you can build a 500 square foot junior ADU by taking a portion of the existing house, maybe a bedroom or a garage, and taking a small portion of the existing house, calling that as a junior ADU. And still, if the lot allows, building an ADU in the back and you could probably get this done within $250,000. And now you have 3 tenants in one parcel, and you have more of a cash flow. As far as going back to tax assessment, property tax assessment, when you're building a junior ADU, what you're doing is taking a portion of the main home structure. So let's say you cut 200 square feet of the main home structure. Your main home gets reassessed downwards, so that technically that 200 square feet that you borrowed from the main house, you don't pay taxes on it. It doesn't increase on your taxes don't go up. It's just based on the additional square footage you add on the property. Just
Henrik,
I want to elaborate on that.
expand on something. We have a question. Jess wanted to hear you review this one more time. Can you address the income tax of how it is exempt if your parents live in the ADU?
If you the IRS rule says if your parents live at the same address, as an accessory dwelling unit or in the same home, and you provide IHHS services for your parents, that's exempt because they live with you. If they were living in a different location, different address, then it's not exempt. You have to pay income tax on that income.
Maybe what we should do is before we log off, let's make sure to list your contact information for you guys one more time on the screen. There may be some people that want to actually talk privately about this with you. So let's make sure we put your contact up on the screen. So let me get to some of these questions. There's Alex wants to know, I want to take a loan on my home, but I want to build it on my mom's property. Is that allowed?
Absolutely. If you take out any mortgage on your home, whether being a first mortgage, refi cash out, whether being a home equity line or home equity loan, no bank is going to ask you what you want to do with that. You want to go on vacation. People use it for vacation, consolidating debt, paying IRS dues, college kids' tuition, planning a wedding, I don't know, going Vegas gambling, building something on their parents' home. I mean, there's a lot.
I want to make a joke that, Jess, make sure you have mom's blessing before you do this, because she is the property owner. That's the only condition that I can see. Right.
Did I understand the question right?
Alex's mom. Yeah.
Yeah. Yes, you can take out a loan against your property and do as you wish. No bank is going to ask you what you want to do, what you're doing with the money. You can build it on another property. You can use it as down payment to buy another property. Anything, it's used for debt consolidation, improvement on that subject property or any other property. As I mentioned, there's many uses for money. You can use it as you wish.
Perfect. Nicole wants to know, are there any loan programs that use future rental income to help qualify for the ADU
loan? No. There is Nicole wants to buy another property, single family home or multi-unit, we use the future rental income of that property to qualify for the loan. We will not currently the guidelines aren't caught up to this ADU rules, and we're seeing more and more loans, tax returns with ADU income on it. But currently, if you are going to take out a loan to build an ADU, we will not be able to use that future ADU income to qualify for the loan. And the purpose is that most people take the loan out because the ADU hasn't been built yet. Even if you go through the planning, you pull permits, you're ready to build, you have a contractor's bid on hand, you're ready to build, the bank is going to say there's no guarantee that you're going to build that ADU. Therefore, I cannot give you future rental income. The structure must be built for us to be able to account future rental income. But in the future, once it's built, then yes, you can.
There used to be a loan called a 203K loan that claimed that they could do this, but I think we had a few people try to apply and no one qualified. So maybe the underwriting guidelines were so hard to qualify that even though the product existed, nobody could actually get approved. So maybe there is a loan that does that. We were never able to get successful with getting approvals on it.
The 203 loans are the FHA home improvement loans. A home improvement loan is not, those are used to improve on a home, such as you want to upgrade your roof, you want to bring in a solar system in there, upgrade your windows efficiencies. That loan is a completely different loan. They do not allow it for additional ADU development.
Okie doke. Komaki would like to know what are some other sources of funding outside home equity that are accessible and viable options? So I think we all know that there's hard money loans out there, but they're generally at a higher rate and then the terms are not as favorable because the collateralization is not attached to real estate. Therefore, they're a higher risk. Am I correct, Karol?
Absolutely, absolutely. There are private money loans out there that they're private investors. Rates are typically higher, 9.5% or higher. They're shorter term, 1 to 2 year loans. They're much lighter on documentation. If you have a heartbeat, you have a decent credit, you don't really necessarily need, and you have equity. You can get qualified. We do those loans, private money loans. The downfall with those private money loans, as I said, higher interest rate, shorter term. If your project takes longer than 2 years, then you have to refinance that with another hard money. And then the main other thing is that the hard money loans, they don't go as high as the 80% or 90% of your equity. They normally cap you out at 65 to 70% of your equity. So you have to have more equity in your property to be able to get the loan amount you need. Because they're higher. They like to take lesser risk on their money.
I think one of the obvious advantages of using equity is it grows like a weed, at least in Southern California does. So if you own property, we saw what happened during COVID. It's like you dropped fertilizer on your property. It just grew and grew and grew. So everyone is equity rich. It's kind of hard to, it takes an eternity to save money. So using a couple of scoops of dirt under the ground seems to be so much more convenient and logical. And especially if you reinvest it back into the dirt, because it grows right back at an even faster pace when you make the improvements of additional square footage, more bedrooms, more bathrooms. So if you have equity, it seems to be the right way to go rather than a hard money loan or a side loan. It's not to say that it doesn't exist. There's a lot of reasons for and against. But again, if you want to talk about it privately, let's talk about it. But that's
just one more addition to that question is that we have 6 different programs available for taking out equity against your property. Full tax returns, full documentation is one of the 6. We have 5 other programs available that don't require tax returns. So there's a lot of flexibility program-wise to qualify to take out a loan as an equity loan against your property. So I urge the audience to not to be scared. What if I don't qualify? What if my tax returns aren't strong enough? Let us as professionals demonstrate what you qualify for. As I mentioned earlier, we have a box that fits all clients, all types of documentation that they can provide.
Okay. Susan would like to know, do you need to provide parking for ADUs? And the short answer, I'll give you the short answer, then I'm going to give you a more complex answer. The short answer is if you are within 1/2 mile of a bus depot, no, the answer is no. Legally, you do not have to. However, I will tell you, your neighbors might appreciate it. So if you have a large parcel and you're going to put an ADU on the back, it would be fabulous. It would be wonderful if you would find a way to create internal parking out back. If you have the space in the room, not only do the cities like it, but your neighbors don't want overcrowding and density and so forth. So as we see ADUs coming up, it's an urban solution. So back in the day, remember when we just a few years back, remember when they were building housing tracts everywhere? They were always on the outskirts of town. So you'd be driving on the outskirts of town and say, oh, there's a new housing tract. Well, all the outskirts of town now touch each other. So there's no more outskirts. They all blend into each other. So an ADU is an urban solution where you can build and more housing products in a metro area. And I think if we think responsibly, if we have the ability to create parking, I always design, whenever I'm working with my clients, I always look at the property and I say, look, are you interested in parking? Number one, it's going to yield more rent because if you're living in an ADU, and you're renting and you have a private parking spot, you don't have to fight with parking on the street, and you're not going to get dirty looks from the neighbors, they're going to love it and they'll pay more money for that just for the peace of mind. And they know that the car's not going to get broken into. So I do think the short answer is no, you're not required to. But if you have the property and if we are designing it, we're going to look at the responsible approach because we don't want to wear out our welcome in your neighborhood. So we want to find solutions to keep your neighbors happy as well. So thanks for the question there. Jess, I see a lot of housing developments in my area, like condos, townhouses, like apartment for rentals. Is it still worthwhile to invest in a building an ADU and complete that? It's it's subjective because if you can afford to build an apartment, build an apartment. Not everybody can. Not everybody has the space, the ability, or the zoning to do so. There are tricks, ADU tricks, new legislation laws that we know how you can take a single family residence and get 4 units on there. That's pretty good. That's a pretty good chunk. If you need more than 4 units, you probably need to build a townhouse or an apartment, but make sure that you have the zoning for it and the funding for it. So, Karol, is there anything you want to add to that?
No, I think you covered it, but I think that's an amazing thing because when you look at right now, if someone was to go buy a 4 unit property, I mean, you're looking at I'm talking about local areas here. You're looking at about $2 million, and it's probably not going to debt service for you because they're on low market rents. But if you have the money to build it, you're building at a fraction of a cost of going and buying a 4 unit that's probably 40, 50 years old, and it's going to give you a better return. So that's why a lot of investors are taking advantage of these types of properties.
Right. And don't forget, everybody, listen, there's no law that says I have a single family, I may have a 10,000 square foot lot. I may have a 15,000 square foot lot and I got 1 unit on there. So I have a lot of unused land back there. I'd sure like to turn that into mailbox money if I can. Well, what if you're allowed to build 3 more units, which you are, and we'll show you how. But what if you can't afford to do all three at the same time? Well, then do them in stages. So I always tell investors, have a 5-year plan. Let's do a master plan to see what the entire development will look like in 5 years and work backwards. And we'll figure out which units come first. Don't just willy-nilly start plopping buildings down and then all of a sudden find out 2 years down the road you messed up the master plan because we didn't leave room for this or for that. There's a lot of responsible things that we do when we sit down and design something with you. So contact us and we'll walk you through that. And I do think building a couple of units at a time is a lot more affordable than trying to build an entire apartment building because the funding is going to be tougher, like Karol said. Okay.
Danny, I like to elaborate on that building.
Sure.
Just for our audience, we do construction loans also. So when you're building multiple units on a piece of parcel, whether being let's say you have a single family, you're going to build 3 additional units, and your zoning allows for you to convert that into a 4 unit, and you need, let's say, $1 million to build. We do have construction loan programs that we can apply for you and help you get construction loans, or building an apartment construction loan as well. So there's plenty of construction loans out there that we can guide our clients in getting a loan for them.
Good point. Good point.
Danny, may I also add one other thing we didn't touch on? Another benefit, some people use it as an Airbnb to generate even 3 times the amount of what you would rent it for. I know people that utilize it depending on the location. If you're in prime locations or locations that are close to certain hospitals, There's traveling nurses that contract with local hospitals for like 3 months, 6 months, and the companies, their relo people pay top dollar. So for example, if the rent is 3,000, they pay you about $5,500 just to place a nurse of a healthcare worker in there for and secure it for several months. So
You just broke the code because that's our biggest secret is the traveling nurse program for investors. So if they're building a 2 bedroom, 2 bath, the traveling nurses, they make pretty good money and they get a pretty
yeah.
good stipend. And so they are relegated to living in Holiday Inns. So if you're willing to build a master suite, one thing they will not do is share a bathroom, and I don't blame them. But if you'll build a 2 bedroom, 2 bath, and you'll make private bathrooms, even the common area doesn't need to be very, very big because a lot of them don't even know each other. They're going to do laundry, they're going to cook, they're going to eat, they're going to go to their room, and they're going to go to work the next day. And they'll do this pattern over and over, but they would love to live in an ADU instead of a hotel. So many of them get $2,000 a month stipend for housing. So if you put two of those combined, there's $4,000. I don't know of a rental program that's going to be better than that, and they pays like a slot machine. So that was going to be our little secret weapon. You just let the cat out of the bag.
I'm
That's
so
good.
sorry. And they're the
No,
best tenants. I apologize.
that's not. It wasn't a secret. It was going to be a bonus. Okay, so let's see what other questions we have. Susan, she wants to know, will ADUs have their own utility line and water line? Are they not connected to the main house? Mike C., are you still on this webinar?
Yes, I'm here.
Tell
Thanks
us
for the
about
introduction.
utilities.
Sorry, I just unmuted.
All right, so tell us about utilities. Susan would like to know how the utilities affect the main house.
How the utilities affect the main house. So if you have a sewer line, that's going to end up being shared with the main house and the ADU. They're going to use the same sewer line going out to the street, but it just needs to be connected in the front. When you're using the water and the gas, most commonly, those ones are going to be shared. You'll have one bill, and we split those off, and the ADU and the main house can use both. But if you really wanted to, you could split those off. It's just an extra cost, and most people don't opt to incur that extra cost. If you wanted to, you can have your own independently readable meter, not from the utility company, where you can go out and measure the difference between the consumption of that main house and the ADU. And then finally, we have the electricity. The electricity is the one that's pretty easy and most commonly split. You can have it under 1 meter, but most cases people are asking for splitting that to 2 separate meters where you get 2 separate bills.
Can you explain briefly on both septic and sewer? They're going to be independent from the main house and why?
Sorry, I couldn't hear that. So the septic and the sewer?
Yeah, why they will not necessarily piggyback off the main house, why they're independent.
So the septic and sewer, it's really important that we don't have the main houses. If the main house has a clog, we don't want it to block up the ADU's connection to the sewer. And if the ADU has a clog, we don't want that to block up the house's connection to the sewer. So it must be in the front of the main house. Now, if you're on a septic is a very specific situation. When we're adding a ADU to a site with a septic tank, we do have to do some specific testing. There's a test called a percolation test. We need to make sure that the extra liquids that are going into this septic system your system is capable of handling that extra flow. If it's tested and allows for additional use, then you can add an ADU. Otherwise, you might have to add an extra tank or an extra pit or an extra leach field to handle the extra fluids. Just as a heads up, I have a project that that's currently just started construction, and it has a septic system. Now, this particular septic system, we tested it, and the test showed that we could only have 1 additional bedroom's capacity of ADU, right? So we ended up building a nice big ADU. It's a 1,000 square footer, but it's only 1 bedroom. Now you can kind of play the game a little bit, but the way that the septic systems are counted for is based on how many bedrooms there are.
Okay. Thank you for that. Olivia has an interesting question. What are your suggestions to someone who is either here nor there on building an ADU and going into a six-figure debt in a five-figure salary? Interesting. I think I'm going to be delicate and I'm going to answer this because I'm not sure I read it correctly, but I'm going to try my best. One of the advantages of ADUs, if it's going to be built for rental purpose, is OPM, other people's money. So one of the neatest things about getting an ADU, and if it's going to be with the purpose of rental, is that you have immediate cash flow the minute the tenant moves in. So if you can get through the funding of the planning phase, if you need it, and the construction phase, that's about as hard as it's going to be. It gets pretty easy after that because you're going to have a pretty good little cash flow. For example, let's say you built a two-bedroom, two-bath for the nurse program, like we were talking about. I can assure you, Henrik will tell us you can probably build that for around $250,000, and it's certainly not going to be $4,000 a month in payment. It's probably going to be considerably less. So then that variable between the rent that you're collecting and the mortgage payment or the forecasted mortgage payment, that's called cash flow. That's money. That's income money. And that's kind of why people are doing ADUs left and right, is because it's supplemental income. So if you're on a five-figure salary, as you said, and you're worried about building a six-figure project, well, if it's on other people's money, I don't think you're paying for it. I think somebody else is. I don't know if that's the answer you were hoping for, but Henrik, you want to take a run at that one? You're muted. You're on mute.
Sorry. um, yeah, typically the mathematic works in a way where if you borrow $100,000, you're based on the market trend and rates, your payments are going to be somewhere between $700 to about $1,200 for that $100,000, based on, again, like your qualifications, your interest rate, your credit. So if you borrow, 250,000, if let's say you're looking at about the $2,500 payment. With the 250,000, you can probably build a nice three-bedroom, two-bath, 1,200 square feet ADU, and you can generate easily $3,800 to $4,000 of rental income.
Right.
Yeah.
Let's see. Luis Rivera, I lost my garage during the Eaton fire. I'm very, very sorry. And think of an ADU, thinking of an ADU as a replacement. The city is expediting construction permits. Any direct experience, whether this includes ADUs? Well, you're in luck because we're based out of Glendale and we are the sister city to Altadena. So we have about 20 clients in Altadena that we're working with right now, some of which lost their house completely, some of which lost their garage, just like you, and a couple, they managed to keep their house. It didn't get burned down. Everybody around them got burned down, but it's so damaged from the smoke, it's unlivable. So their condition may be worse. The short version is, I think that yes, we can talk to you about this. I know you're allowed to rebuild, and you're supposed to only rebuild with a 10% change, but we think we have a workaround for that. So if you want to contact us or contact me, Louis, there's my number up there, and I can chit chat. And I can tell you what we're doing for other people. And yes, there is light at the end of the tunnel for you.
I want to add into that. We've built a lot of ADUs and we've got a lot of plans that have already gone through and been approved. And if we can tap into one of those pre-existing plans that we've done, we'll be able to get that rushed through planning as fast as possible for you so we can get straight to construction and get you back on your property as fast.
I think every county is helping with overflow, and LA County certainly cannot process 19,000 homes and businesses that require permits, including Pacific Palisades and the Altadena neighborhood. So everybody has this victims first motto. So I don't think you're going to be held up. I think they know you're 911 and you slide right to the front of the line. So we'll do what we can to help you.
100%. We're definitely in
Okay.
it there for you. I'm meeting somebody tomorrow at 9 a.m. doing the same exact thing. So yes, we'll be able to help.
Jess would like to know, do you need to have a parking for SB9 and ADU on the same property? Well, there are some conditions with SB9 that SB9 allows you to have multiple ADUs on the property. You have to have multiple accesses to the property, and there are some conditions. It's such a lengthy topic. Jess, how about you contact us and we'll kind of walk you through. I don't know this is a topic that everybody's interested since tonight's about financing. So let's table that one and you can ask us directly and we're happy to give you the comprehensive answer to it. Let's see. Can we get, what happened here?
There's a link in the chat you can click on, and that gets you directly scheduled with one of the project managers that can answer that question for you.
Okay, so this says, can we get a general idea and explanation of a garage ADU conversion? How much faster is it versus an ADU? Cost versus cost per square foot versus regular ADU? Do we need a carport after refinancing? This is something we can all take advantage of if we don't have a lot to build with an actual ADU. Okay. There are many facets to this question. There's no quick answer. So I'll give you the medium fast answer. Garage ADUs, you would think, are more affordable necessarily or cheaper than ground up construction, but that's not necessarily so. I'll give you a condition. If you go into your garage, it says asset. So if you go into your garage asset and you look on the perimeter where the wall meets the cement, if we see that the 2x4s are laying directly on the slab, your project cost is going to be expensive. If we see evidence that there is a cement riser, about 2 to 4 inches, that's called a stem wall. And the stem wall is evidence that there are footings and foundation below the floor. Those footings and foundation are vital for us to convert it into a livable dwelling habitat. If they are not visible and you don't have them, we have to make them before we can create the ADU. So the question is, if you have them, your project could be more affordable than a ground up. If you don't, it's probably more feasible to demo the garage and build that foundation the way it's supposed to, and then build straight up. Otherwise, what will happen is if we have to leave the garage in place, we literally have to trench around the perimeter of the garage and go down about 2 feet to put in rebar and cement and footings and so forth. It's labor intensive and it's expensive. It's about $20,000 to do that, and it blows an extra 2 months on construction because we can't do more than one wall at a time. If we did a trench around the whole perimeter, it would sink. So we have to do one wall at a time and then let it dry, and then the next wall, the next wall. So we're going to gobble up 2 months, and I don't know that it's cost effective. So to answer your question, go look at your garage. If you have a cement riser or a stem wall, your project could potentially be cheaper than ground up. If you don't see evidence of that, it's going to be worse. So it might not be in your interest to do a garage conversion. But to know for sure, maybe schedule a video conference call with us. We'll get on Google Earth. We'll look down at the property. That's how we like to do it. We always have a motto, measure twice, cut once. So if we can look at your property before we start, tossing out generalizations, you'll be happier and we'll be more accurate. Okay, so I hope that helps. Let's see. Oscar, are you sure about the ADU income? I talked to 3 lenders and they told me even when I build it, I won't be able to use my income as my primary. I talked to 3 lenders and they told me that even when it's built, I'll be able to use the income on my primary. I think he's referring about taxes.
Danny, if I may interrupt and elaborate, I responded to Oscar already. What Oscar is asking on that question, I think, is that can he use the ADU income even if it's billed for future purposes as an income, additional source of income on their income taxes? Yes, that is 100% correct. You can use that rental income from your ADU on your taxes as long as the ADU has a separate address and it's reported on your Schedule E of your tax returns. And then, yes, 100%, 1,000%, that income is allowed by banks and is usable for additional income on top of your personal income. So those three other lenders are incorrect.
You know what he might be thinking about is, can he use the proposed income from the ADU after it's built to help qualify for the loan to get it started? And that might be a trickier situation. We might have to do some type of refinance or rebuild the loan a different way after it's completed in order to do something like that. Would you say that?
Great, Michael, great question. Yes, as you, the proposed rental income cannot be used unless she has, if it's not on their tax returns. Let's say the ADU is built and it's not the time for them to file taxes yet, and it's not evident on their most recent tax returns. The way we counter that is that they must have a tenant lease agreement for 3 months. The proposed rental income cannot be used, no. But if they have a tenant for 3 months and they have documented rent received for 3 months, then we could use that income, 75% of that income.
Got it.
Great question, Michael.
Again, if we, the purpose of the webinar is not just to, educate, but it's also to create a facilitated introduction to Henrik and Karol. So if you guys want a private consultation, the link is in the chat. Click on it, schedule a consultation, a private meeting with them, and they'll answer all your questions if you like. Patricia Garcia would like to know, what if you have a home that needs a new roof or needs some work? Will you also do that as well? Well, I think we're general contractors and we know a guy that knows a guy. So if we're on the property, I see no problem in walking a couple of feet to the main house and helping you out. As a matter of fact, you're likely to get a prorated discount. So I think what we want to maybe convey to you guys is that all contracting work has to be standalone work. It's got to stand on its own merit and pay for itself. However, if we're already there doing an ADU for you, we can do what's called an add-on project, meaning we're already there. So it's implied that you're going to get a little bit of a, friends and family program. So yes, if we're designing something for you, we'll certainly help you with anything, whether it's a kitchen remodel, a little love in the bathroom, new windows. We've had customers say, hey, the ADU has better, it's all brand new paint. Now my house needs to be painted. Or I like the new windows on the ADU. Can we retrofit my house? Yes, all of the above. We'll take care of all that. Mariana wants to know, so if the JADU is converting my garage, taking part of my home, but having a different address, it won't be taxed more than the regular tax we already pay on the property? Good question. But if I build a brand new ADU, the new address will be taxed separately. So here's the thing. If you were going to permit it as a room addition, it would have a slight tax change on the main house. But if it's going to have its own AP, its own assessor's parcel number, and its own address, it is now standalone. So therefore, it's going to be treated like an ADU. You're allowed a junior ADU and an ADU, but you're going to be figuring out your tax base on the improvements, which in this case would be the junior ADU. So
I want to add something to that because you're referring to two different things. One is a separate APN where you have a completely separate parcel. Separate parcel is going to be a completely separate tax basis, right? But if you're on the same parcel, you can still have two addresses. The ADU can have an address, the main house can have an address, right? But it's still on one parcel.
No, I think they get to choose. I believe they do. So that's a good question. I mean, that's a really good question. So I think maybe what we could do is probably check in with the city and see how they view it. The city ordinances basically are the governing body. So each city ordinance is a little bit different, but we haven't seen too many curveballs yet. But let's maybe chit chat with you guys about that, Mariana, and maybe we can do a little investigative reporting for you with your city and find out. Okay, so let's see, like speaking of the, so, okay, we've already answered that one. What is the average so Amy would like to know, what is the average price per square foot you're seeing in ADU construction? So I would say that there's two conditions that I want to maybe throw out as glossary terms. Price per square footage is certainly one of the things that people do to factor in pricing, but scope of work is more important. So I think what you need to do, take the responsible question, don't just ask one, ask both. For example, if I took that garage scenario that somebody was talking about earlier, most two-car garages are about 20 feet by 20 feet. So let's call it 400 square feet. So if we just took a willy-nilly formula of price per square foot alone, does that mean I could build a 400 square foot ADU on top of my garage as a two-story and it's the same cost as a ground floor? No, it's not. Does that mean if I have a side hill in my backyard, a big slope, and I want to build the ADU on the side hill, it's only 400 square foot. Is that now the same price as the square foot of the 400 square foot garage? No. So I think what we need to do is let's be fair. There's price per square footage and then there's scope of work. Depending upon what you're talking about, we have to make sure that we factor in the scope of work. Are there elevation changes? Is the lower part of the property where you intend on putting the ADU lower than the front half? Now, how are we going to get the sewage going up there? There are some other factors that we have to consider. And are you in a floodplain? Do you have telephone wires? Things like that. So if we just kind of move all that stuff aside and say, we're not going to ignore that, that's very much part of the equation. But if you just wanted to say, what's the going rate? Most of the stuff in Southern California, at least not in the high-end districts. So let's say excluding the coastal places and the Malibus and the Beverly Hills and La Jolla's and stuff like that. Our service areas from Ventura down to San Diego all the way out to Palm Springs. So we hit a big territory, but the pricing is different. It's regional. But if we took Los Angeles, which hopefully is where a lot of people are calling from tonight, 275 to 325 per square feet is that zone. It's that range. So you can almost do your own math and say, if I'm building 1,000 square foot something or other, at the low end of the scale, am I safe at saying 275,000? At the high end, am I safe at saying 325? Yeah, sometimes you are, as long as we don't have a scope of work issue. So what's the variable in between? The finishes. Do you want to go basic, middle of the road, or Beverly Hills finishes? It could be as much as 30%. So these are things that we have to show you. What do basic finishes look like? What do middle of the road look like? And what do Beverly Hills look like? And then you'll determine where which tier of finishes you're going to be at. But again, I don't want to throw out a willy-nilly formula. I want to make sure that we say the responsible answer, which is scope of work plus square footage. But the square footage formula I gave you is a good one. Okay.
You know, the square footage idea too, it sounds like it's linear. It's not. So the price per square foot for a small project is more expensive than a price per square foot for a medium project, and it's even less for a price per square foot for a very large project. So we have to keep that size in mind. I kind of wish that price per square foot would just go away. It complicates things more than it solves me problems. I would love to be more detailed and actually go over the true scope of work and just give you realistic numbers in a consultation.
So this sort of brings me up to a question that Alex asked before starting on the financing. Is someone able to evaluate the space to see how big of an ADU I can build? We would be delighted. And there's an easy way to do it, and we use technology. So Google Earth is our friend. So what we're able to do is we're able to use the satellite vision, that vantage point, look straight down at the property, and that measuring tool on Google Earth is pretty darn accurate. So we can basically figure out where your setbacks are. Setbacks are the distances we need to be away from the property line and other structures. And then we can actually build it and show you what it's going to look like, how big. So you might have 4 or 5 different ways to go, 4 or 5 different options. So Alex, I encourage you to schedule a video consultation. It's free, doesn't cost you nothing. and you'll learn quite a bit. And then so the format that we like to do is we start with a video call to look down and figure out where all the heavy lifting is going to be, and then we follow it up with an on-site inspection just to sort of confirm or reassess whatever we think we saw. Sometimes we can't see everything on the satellite feed, but a lot of times we get pretty accurate. So if you want to know, what your property possibilities are, just schedule a free video call. We'll hammer it out. It'd be great. Let's see. Scheduled. Can you explain the eviction process on an ADU? This is from Larissa, and I understand the pros and cons about ADUs, but what are the cons? Um, I don't want to monopolize the webinar. Who wants to tackle this one? Anybody? Karol?
What are the cons of an ADU?
Well, the downside. So if you're going to be a landlord, there are downsides, meaning that you're going to get bad tenants from time to time. And how does one go about evicting a bad tenant, I guess, is the root of the question.
Right. Well, I think that's with anything we do in life, there's risk and risk factors versus benefits. So if I think the best process is to weed out the tenants up front and do the due diligence of the application process and the credit check and maybe an interview and hope for the best. But that's really a chance that we all take with anything in life.
Right,
But
right. I don't know there's an easy answer. There's complicated ones and they're all
yeah,
bad. But I mean, the idea is if we have a squatter that won't leave, we have to go through, you got to go through some hills and valleys to get them going. It's no different than if you had a house and somebody was living in there and they decided they know their rights and you can't evict them. I don't know. It's not a pretty scene.
yeah.
So,
I mean, and all, when it comes to squatters, there's actually a bill. I can't remember the name of the bill. That I believe passed actually to be able to remove squatters because with law enforcement. So
um, it's
All right,
not
Danny,
this.
before you get into that next one, we're going to take a quick, maybe 2, 3 minute brief intermission to let you guys grab a cup of water. And while you're doing that, folks, there's going to be links in the chat. Please take a look at those links in the chat. There's two of them. One of them is to discuss your project with one of the ADU consultants to talk more about ADU specific information. And the other one is to talk directly to the lenders where you're going to get some more lending specific information. So if you just give us about 2 minutes and we'll be right back. If you want to click on those links and get that started.
There's quite a few questions. We promise we'll get to all of them. If you have questions, just type them in. We'll get to them. Okay.
We'll be back on in one more minute. One more minute. We're about to restart. If you guys want to answer that poll question, we'll be on in a few seconds. All right, Danny, are you ready to go?
I am. I am. I'm just sort of reading some stuff. There's a couple of good questions in here. So Daniel asked about a reverse mortgage. Um, I'm going to tell you something. I learned a valuable lesson about reverse mortgages because I don't know why it happened or when it happened, but at some point I had heard some negative things about reverse mortgages, but then we had a couple of clients actually do a reverse mortgage and build their ADU, their lifestyle change. They have no mortgage payments. My own father did a reverse mortgage up until he passed, and then we received the house back and we converted it back regular loan. There is nothing bad with reverse mortgages. As a matter of fact, if you're over 62 years old and you don't want a payment, and you're willing to let a little bit of equity drip out of your home to make the payment for you, it's a great lifestyle for seniors because what happens is the home is still traveling, it's still gaining equity. So by not making the payment, they're taking equity out per month. And believe it or not, it's about a linear wash. So you're really just buying time. And for anybody on the webinar that's saying, boy, it'd be great not to have a mortgage anymore. It'd be great to live the remainder of my life with no mortgage payment. And when I'm gone, the kids can get it and they can put it back to a regular mortgage and do what they want. That's exactly what it is. Nothing bad happens. It doesn't have a big boom effect of any kind. So I've become recently a very big fan of reverse mortgages because to me, it's a complete lifestyle change for people that don't have much to look forward to. And we all worked hard in our lifetime to get this far. The economy is not what it was. It's a much, much more expensive place to live. Just go to the grocery store, look at gas, and so your precious Social Security income could get gobbled up quick. And it's not enough to have a lifestyle and make a mortgage payment. So having no mortgage payment with a reverse mortgage, I think it's a beautiful, beautiful way to enjoy the remaining parts of your life if that's something that you're interested in doing. And I saw it firsthand. It extended my father's life an additional 7 years, and he got to go to Europe and travel to Paris and Italy and have a great time. And I'm convinced that had he not done that, his life would have been shortened. So I am a firsthand witness of the benefits of a reverse mortgage. So Daniel, I hope that answers your question.
Just FYI, we do reverse mortgages. We're one of the approved lenders, local lenders that not a lot of lenders don't do reverse mortgages, but we are, just for the audience to know.
Right.
I want to add another take on reverse mortgages that's helped out a lot of my clients too. Not every time do you have to think about a reverse mortgage as a traditional reverse mortgage. You can think about it as any other kind of loan that you can pay it back. But you pay it back without the penalty of the, what if I can't make a payment this month? How is that going to affect me? Well, it affects you a lot if you're on a traditional loan, but if it's a reverse mortgage, that's okay. You're not obligated to make a repayment. You're just going to, it just comes out of the equity. And then when you're able to resume payments, go ahead and resume payments. It just makes you the process so much more flexible.
Right. We call it put it on my tab. So the tab obviously grows back like a weed. We talked about the growth in the equity. In Southern California, you could be on a reverse mortgage and maybe at the end of the term, you haven't lost a nickel. It's still earning at a very, very rapid rate. So the amount of money that you're not paying does get depleted from the equity reserves, but it grows back super fast. So it's a really slick program. I like it a lot. Larissa wants to know, is a 1,200 square foot the max ADU square footage for California? It is in California, but your city can override that. They may say, for example, City of Glendale says 1,000 square feet is what they want. So you have to check with the city to see if they have a further restriction, but the state law is 1,200. Joseph,
there's a unique trick. If you're converting an existing structure that's already larger than 1,200 square feet, you can go bigger than 12. But that's kind of rare for somebody to have a more than 1,200 square foot garage in their backyard.
Okay, so Joseph is asking, should I get a HELOC loan first to get the max amount, or should I get an ADU quote first? It's subjective. We've had people go shopping for an ADU, and we decided that they can have whatever they want, and we helped them design it. We helped them create it on paper, at least, not before it went to the architect, only to discover they couldn't qualify for the loan for whatever reason, because they had excessive debt, they had debt to income ratio, or they're on a fixed income. They didn't qualify for the loan, period. So I'm learning that we should get pre-qualified. So the real estate industry, if you go to an open house and you want to put an offer on a house, you're not allowed to even be taken seriously without a pre-approval letter. I don't know that it's that strict for ADUs, but you should probably know what your shopping budget is before you start, barking up a tree, because you could wind up, let's say you wind up saying, I want to build a 1,200 square foot, 3-bedroom, 2-bath. Then all of a sudden we find out your availability of funding is less. Now it's going to feel like a consolation prize. So you might want to find out, do I have a blank check? Can I go do whatever I want? Then I'll get the ADU consultation. You might want to start with the funding questions first to find out, make sure you can check all the boxes. Now, if you have, blue sky, you can do whatever you want, then that's fine. We'll still talk to you. But I have had customers kind of disappointed because they had hopes for what we created together, only to discover they were short. And no matter what we showed them after that, it was simply a matter of decontenting and shrinking maybe a 2-bedroom to a 1-bedroom, but they had their heart set on it, and so they said, no, we're not going to get anything. And I don't know what the benefit of nothing is over something, but they were heartbroken. So maybe to avoid that, you might want to check in with Karol and Henrik and find out, what's the forecast look like for funding, and then make an appointment with us, and we're happy to help you figure out the scope of work of whatever you got there.
Yeah, I would say that Henrik and Karol, they have a lot of experience in a lot of lending products, but I would also say that not every single lender has every single loan product. And sometimes when you talk to one of the ADU consultants first, we might help you. If one lender doesn't say yes to you, that doesn't mean that all of them won't say yes to you. So just keep that in mind. If you're going through this process and you don't find information that you love, it's still worth a conversation.
if gentlemen, if I may add to that. So number one, when you get pre-approved, you kind of know what your buying power or building power is. It also saves a lot of emotional stress. People get excited when they make a decision to build something, and then when you realize you can't do it, kind of puts a damper on things. But more importantly, when if you're thinking about it, when you talk with us, there's also things that we do. Let's say there's some dings and stuff on credit or on the income. So this gives us also an opportunity to work with you to correct what needs to be corrected to get you in a better borrowing bracket. So that also saves time with that.
Right, right. I want to remind everybody, if you are interested in a consultation with Karol or Henrik, there is a link in the chat. Simply click on it, and I think it'll take you to a calendar, and you can pick a day and time, and that's when you can have a private conversation. And they will tell you everything they know about lending and financing, and you'll be a genius by the time you hang up. By contrast, Michael and I have a link in there. If you want to schedule a consultation, whether it be just a phone call or a video call for us to kind of look at your property and sort of survey things before you dive too far in, that's probably a good idea. And that's free too. So click on the links and schedule something, a little chat. Let's start with a phone conversation or a video call, and we can kind of figure it out as we go. Mariana, Vahe wants to know if I add an ADU, 900 square feet detached in the back of the house, when they get the certificate of occupancy in Glendale or Burbank, when will the property tax go higher? So I'm not sure that I'm reading that right.
When is the tax assessed? I think is what he's asking, and I believe that is at completion. That certificate of occupancy is when they assess that.
Probably, I would assume so. COO is when that's your finish line. So, and he actually wrote certificate of occupancy. So, Vahe, I think you're right on the money. I think that's when the timing would work. Mariana would like to know, if I book a consultation, would we be able to do the videos to see my garage? Well, if you do it on your phone and you walk out there and show us what we got in the garage, yeah, we'll tell you right on the spot. So you can either do it from a computer or from your phone, and as long as you're mobile and you can show us a little something in your garage, we'll tell you all about it. So that's easy stuff to do. That's what I love. That's why I love the video calls. Okay, iPhone user says I want to do an ADU in Garden Grove. Not sure how to finance it. I do have savings investment from capital gains, and I also plan to do some HELOC. Do you think it's a good idea to take some funds from each? I got quoted for 80,000, not including plans and permits. I don't know if 80,000 was for the construction. Seems a bit low. So
It looks like a JADU though, so he might have something that's already done.
don't know. So Mr. iPhone user, you might want to just give us a jingle. Let's like I said, measure twice, cut once. Let's make sure we don't answer the question on live TV wrong. So call us up, and then let's try to make sure we know what we're saying before we say it, and we don't give you the wrong answer. Joseph, can I get more rental income with two one-bedroom units instead of a 1 2-bedroom unit? My handyman mentioned this to me and explained how 2 units would bring more. Can we have your insights? Michael, you want to take that one?
So if we have a rental income with 2 1-bedrooms versus 1 2-bedroom, so individual units will always generate more rental income than a 2-bedroom. And surprisingly, the rental rates have gone through the roof as of late. And Henrik, I think we need to adjust your presentation a little bit too, because you had 1,800 on your presentation for a 1-bedroom, but we can shoot that up all the way up to maybe 22
I
to
don't want to
2,500.
embarrass you, Henrik, but the market is absolutely bazonkers right now. So the rents out there are astronomical. So we need to update some of that data, because the numbers you gave are good, but they're way conservative. Everything's up at least $1,000 higher than what you mentioned.
That was on a 500 square foot 1-bedroom, possibly a studio junior ADU rental income.
Right. So like right now, So even though just to throw this out here, guys, Section 8 is, I would consider, kind of our lowest cost of rental income, the lowest number that they would expect to get. Even though they're not taking new applications right now, there's still a bunch of people that already have applications. They're still looking for Section 8 homes. Section 8 homes in the lowest cost area of Los Angeles right now is at $2,170 for a 1-bedroom unit. That's pretty amazing. And then if we go up from there, it goes all the way up to close to $3,000 just for a 1-bedroom. I'm sorry, $3,480 on the higher end areas of LA, and that's just for Section 8 for 1-bedroom units.
That is crazy.
So rental rates are through the roof, and you can imagine Section 8 is going to be the lower end of that scale. So it's only up from there.
Yeah.
So
And that's
why do you
guaranteed
think, why do
income.
you think ADUs are so popular? Why is there 80,000 ADUs in California? Because it solves a lot of problems. Yes, Carol. Sorry, didn't mean to interrupt.
No, I was saying with the Section 8, that guaranteed rental deposit on the first of the month.
Yeah. And that, a lot of investors really like that guaranteed rental income.
Yeah.
Right. I don't know if we mentioned it in I think the beginning video. We need to update that video. When I narrated that, I think we're already past 500 ADU projects. We're now approaching 600. So we have 10 architects on staff in-house at our office, and we have 20 licensed general contracting teams that do all the work. We do all the permit expediting. So I don't know if we are the largest in the state, but we are well on our way. So if you want to make an appointment to chat with us, I think repetition is a good teacher. We've done this enough times. We probably know the answers. So let's see. Is there any other questions that we missed? We are getting down to the last one. How do appraisers look at the value of the property with an ADU? You just mentioned it. It's not just additional bedrooms and bathrooms. So I think they're still scratching their head, quite honestly. I don't know that they have an opinion that they can actually write down. They are going to do historical searches and see what other appraisers think about it so that they can take the safe road and conservative road and they won't stand out too far. I don't think remember, a lot of this is brand new since 2020. So I think that as time goes on, the appraisal values will become bolder. Are they snail crawling up the ladder? Yeah, they're definitely going up. Are they going up as fast as a home? No, but homes are tried and true, and I think we've had a track record of home values a lot longer than we've had ADUs. So give it a little bit of time, allow some seasoning, and I think, within a decade of 2020, so maybe by 2030, all the appraisers will be experts, but I can guarantee you your value will not be going down. It's trending upwards. What's the rate? I don't know, but I think it's subjective. But I think at some point in time, they're going to start sticking their neck out and being a little bit more bold.
I have a
Planning.
specific example of a client that just did their ADU not too long ago, less than 6 months ago. Now, they had a lender that required an appraisal before they started their project to get their loan started, and then a reappraisal afterwards to refinance that loan. So I have direct data on that particular project. That home was in Claremont. It appraised for $1 million to start out. We added an ADU for $260,000, and after that ADU was built, it was reappraised for 1.4.
I just closed a transaction in Pasadena where the past client built an ADU and a junior ADU. Prior, we refinanced cash out, and appraisal came in at $1,350,000. After he built an ADU and a junior ADU, appraisal came in at $2.1 million.
Wow.
So yeah, that's definitely there's plenty of comps. More and more are being built. Investors are using this as to do a lot of flips we're seeing, or building and then selling, upselling. One thing I wanted to elaborate also is that I was told that obviously there's a lot of investors here. There is a when you build an ADU, there's a rule now that you can subdivide the parcel and sell the ADU and create an HOA and sell the ADU without selling the property, the front single family. So investors, if you guys are watching, that's also another exit strategy. You can build an ADU for 150,000, 250,000, and sell that as a townhome. Create a new subdivided, have a new a separate APN with HOA, and sell that unit for 500,000, 600,000, 400 to 600,000, and cash out that way as well.
That was an amazing bill that passed, huh? I really loved that one. Just as a heads up with that one, we do have to address that city by city with each one of you that are interested, because the bill specifically said cities are allowed to do this. It didn't mandate that they must do this. So individual cities will opt in or opt out of that resolution.
Thank you, Mike.
We have some ADU 101 questions. We're gonna tackle everybody's question. There's a couple of questions. How do you differentiate between an ADU and a junior? We need to cover that. What is a reverse mortgage? So apparently we were talking a little quickly. We need to kind of go backwards and explain what a reverse mortgage is. And we had Yolanda had a feasibility study done and confirmed that they can do an ADU, but they were told they could do a maximum of 800 square feet by the city. They have a big lot, 8,100 square feet plus. Can we negotiate with the city to get a 1,200 square foot? So let's just kind of take the easy ones first, and we'll leave the more complex ones for last. Liza wants to know, do you finance ADUs? Yes, we do. That's the purpose of this webinar. Liza, if you came in late, if you look at the bottom of your screen, and you see a little symbol that says chat, click on that chat. It'll open up a separate screen, and then scroll, and then you'll see something to speak with Henrik and Karol. Click on it, make an appointment in chat, and they will give you a free estimate over the telephone. Okay. Mariana, what is a reverse mortgage? Now, I can give you the layman's term, or I can let Karol explain the more technical term. So, Karol, you want to run at this one and explain what a reverse mortgage is?
You want me to do it, or Henrik, you got that?
Danny did a great job of explaining reverse mortgage earlier. I won't get into details of it, but
can I give the lazy definition? It's just a word.
Absolutely.
Yeah.
Go ahead.
My dad did it, and I didn't know much about it. I wasn't even supportive of it. I was actually sort of against it until I saw the results, right? So let me just kind of give you the bird's eye view from pulling back, looking down on things. Imagine that we have worked all our lives, and at some point the income is dwindling, isn't it? And as we approach retirement, or we've arrived, we begin to realize we're out of money. And when we go to the grocery store, it gobbles up a big chunk, and the gas gobbles up a big chunk. And if we have a mortgage payment, it seems to gobble up the rest. The biggest of those payments, of course, is the existing mortgage. So what if you can vanish the mortgage, not get evicted, you stay living in the house, you still own it. As a matter of fact, they will allow you to do it. They'll allow you to live in the house as long as you want, with no monthly payment. They will just start every month. They'll take a scoop of dirt from under the ground, and they'll put it into a box. The box belongs to them. But the box is a very, very small in relationship to the property, isn't it? There's a lot of dirt, plenty. And not only that, the dirt grows itself back, and it's called equity. So as every year the equity is growing up, the box is getting filled and going down, but they seem to cancel each other out and be a straight line. We're not really earning a lot, but we're certainly not losing. We're sort of breaking even. But how about this? How about another 5 to 10 years with no monthly payment? And now that money that you're spending for your mortgage How about do something funner with it? Go get a new car, go to Italy, go to Europe, take a trip, buy a Ferrari, go do whatever you want to do. And one day we'll all leave this world and we'll go meet our maker, right? At that time, the kids or whoever the survivors are says, well, we don't need the reverse mortgage. Can we just kind of refinance it and put it back into a regular mortgage? Yeah, sure you can. Sure you can. So that's exactly what we did with my father. And he was supposed to pass away relatively soon because when my mother passed, he was ready to meet her. But he lived another 7 years. He got to travel. He got to have a lot of fun with no mortgage, no stress, no pressure. Oh man, did he ever live? He enjoyed fine wine, nice restaurants. The quality of life that he had was it was unbelievable. So I am a fan. I saw it firsthand, and I'm absolutely positive it extended his life, and he got to do everything that he wanted to do. All his hard work paid off for him because with that extra 7 years with no mortgage payment, he did a lifetime in that time. And so, Marianne, that reverse mortgage is an opportunity to get rid of that monthly payment so you can live the golden years the way you want to give it to live them. Okay. So that's not a technical explanation, but it's a pretty damn good one.
You know, Danny, I've seen you. You don't have it queued up right now, but you have an amazing, little PowerPoint that you put together that puts visuals to that explanation that makes it so much easier to understand. And if you are interested in a reverse mortgage, I think a quick consultation to follow through with that explanation a little bit better
Well, just
is
I
a
can
great
send the
idea.
PDF. I made a great analogy in the spirit of my father, and it's better than any words that I can use. So if you're interested, I'm happy to share it with you. Just hit us up in the link, and I'll email it to you, and then you will be an expert. I promise you. All right. Okay, so let's see. We're almost out of time. Difference between an ADU and a junior ADU, the quick thing. We're allowed a junior ADU, we're allowed an ADU. A junior ADU by definition has to be under 500 square feet, and we have to commandeer part of the house, which means it has to be touchy. More specifically, it's probably easier to make an ADU out of a attached garage because it's touching already, or a unused bedroom or master bedroom that we can maybe expand a little bit. The key things attached, owner occupied, you got to live in the house, and then you have to be under 500 square
Yeah.
feet.
And
If
not just attached, but carved from the existing structure.
correct, correct.
Right.
But you're allowed both. You're allowed one junior and one ADU. Therefore, they have two different addresses and you've got two renters. So this is how people can get mailbox money on one property. It's really a beautiful thing.
Now, because
Um,
there's so many investors on here, I want to add one more thing to that explanation. It doesn't work so great for juniors on investment properties because junior ADUs do have an owner occupancy requirement. You, the owner, have to live on the site, on the property, in order to rent out a junior ADU independently.
okay. We're going to take one last question. And this is Yolanda's. They did it. She did a feasibility study done to confirm they can do an ADU. They told her you can only build 800 square feet. Is there a workaround where you can grow the project? Yes, but it's a secret. And I don't know that we have enough time to explain it on this call, but there is a workaround. So could you please click on one of the links and schedule a conference, and we'll tell you exactly what you got and how to do the workaround.
We need a little bit more details too. We have to know like square footages of the main house. We have to look at RFA calculations. There's just a lot of details that I got to dig into to answer that.
All right. I want to say thank you to Karol and Henrik. Thank you for joining us. It was lovely having you guys with us. Appreciate you guys being part of our team for the webinar. Michael Koromokos, thank you for being on with us. And all of you for watching. We try to do this once a month, and we'll pick topics. This one happened to be about financing, but generally we'll pick any random topic, and it's basically based on your feedback, what you guys want to hear about. We're happy to help if we can. Again, the consultations with Karol and Henrik are always free. The consultations with AD Resource Center is always free. So anything we can do to help you get on your way, we are happy to do it. And with that, I think we are done for the night. We went a little bit over, so if there's any other questions that we can help you with, contact us directly. We're happy to help. Other than that, have a wonderful evening, everyone.
Thank you.
Thank you, everyone.
Good night.
Have a good night.
Okay, we have one last item before we wrap it up for tonight's show. Please stay on 2 more minutes and meet the architectural design team in a short video and tour of our offices in Glendale. We hope you'll subscribe to our monthly webinar as we have new ideas on ADU design tips, value engineering ideas, controlling your construction budget, and listening to new speakers each month to get a variety of advice and recommendations for your own ADU projects. Thanks for coming, and we'll see you next month. Welcome, friends, to ADU Resource Center in beautiful downtown Glendale, California, right on Brand Avenue in the U.S. Bank building, where we have plenty of free parking. Come on up to the 5th floor and say hi to our design team. While we take a short elevator ride up, I'll tell you a little bit about our company and what our services are. ADU Resource Center is a one-stop shop, and that simply means we take care of everything relating to the project. That means anything from architectural designs, structural engineering, Title 24 energy calculations, low-impact development calculations, and permit expediting. The design team is on staff. We do everything on the 5th floor, and as we walk into the building, you'll notice 2 conference tables for our customers so they can come down and sit with us and design and look at the big screen and figure things out together. During peak season, we might have several customers in at the same time, so we offer private rooms so that we can keep privacy and noise down. This is our private conference room with a beautiful view of the San Gabriel Valley Mountains, and what a view. Does it help us design better with inspiration? You better believe it does. So the next room we're going to go into is the architectural design room, where Santa's little helpers do all their magic. Well, that about wraps up our quick office tour. I hope you enjoyed it. Here's the printer where we print out all your plans. Come on down to ADU Resource and let us help get started on your design today.